That contract itself is for $6 million over the 5 years. Again, the recurring revenue, so part of that was up front, but most of that comes over the 5-year contract. NetJets has a fleet of 650 aircraft worldwide. That is NetJet Europe, NetJet USA, and NetJet Middle East. So what we want is to leverage that onto the other OEM products in the Europe fleet, and then expand into the US and the Middle East fleet. And we think we can do that. The 228 progress. So the 228 Bravo was installed and generating revenue. So the first generation of the 228 is now actually operational on CRJ 900 aircraft. We have 3 of them operating right now, and they're in a revenue generating position. So we finally got the 228 into a position where it's making money for the company. The 228S, the certified version, the first hardware is being tested by a customer on a bench. So they have it in their laboratories and they're using it to confirm that it works the way they expect it to, and that it's going to give them the functionality that they need. We're getting good feedback from them about the product. We have a 65 unit backlog of the product of the 228 already, and that is essentially for RSAF, the Royal Saudi Air Force, and for the NetJet fleet. The installation, some customers are taking the 228 Bravo right now, and then they're going to upgrade to the 228 Sierra. The nice thing about that is it's a simple box swap. You don't have to do any additional wiring. As we do the installation for the 228 Bravo, we're all set. We just pull out the Bravo, slide in the Sierra, do a function test, and the product, the aircraft leaves. That's a huge benefit to the operator, and it's actually letting us get more product out there now. We expect to have first commercial installation in Q4 of the 228 Sierra. I just mentioned briefly controller pilot data link. There are mandated changes that are happening in Europe. Controller pilot data link under the Link 2000 Plus program are beginning to come into effect. The 228S with some of our partners is going to be used as a solution. It's a much cheaper, better, more economical solution than what the OEMs are offering. So Bill mentioned we're starting to do some IR work. But what have we been doing then for the last year if we haven't been out there doing some of the IR stuff? We've been making some changes in-house, and we've been planning for the future. So the sales team has completely, not completely, but the sales team has made some big changes. Part of it was rebranding under FLYHT. So even though we did the name change now, we've been operating under FLYHT for some time. We continued with FLYHT Stream, the data streaming demo to the BEA and ICAO. The BEA is the Accident Investigation Board in France. They were responsible for the Air France 447 investigation. They were pleased with our work. They were very pleased with our work, and went and actually had us give a presentation at ICAO in Montreal, the International Civil Aviation Organization. That's going to lead to a product called Data on Demand, which will be where rather than waiting for something bad to happen and streaming the data, we allow people on the ground to receive the data anytime they want. The 228B has been built, tested, certified, installed, and is billing, and that's in the CRJ 900 platform that we have operating right now. The 228S certification work is still continuing full steam. So the goal is to have that completed by the end of this year. And we're doing that work in-house. That's not being done through contractors. Product line expansion continues, so we now have the 220, the 228 Bravo, and the Sierra, and we're adding new functionality with the software that we run on all of those platforms. So new services are being offered with what we call ELA, Embedded Logic Applications. That's the part that runs in the Level E space that is native to the 220 product. Management teams have been growing and expanding the processes to grow so that we can grow the company. So when we look at the projected numbers that we're going to end up for the installations and the staff that we'll have to have, we needed to make sure that we had a company and the processes that were able to handle that. And we've spent a lot of time over the last year building those systems, making sure that we're ready for them when that growth actually happens. And we're benefiting from that now. This is a graph showing where our recurring revenue is coming from. The most important part is the 54%, which is the recurring revenue from the 220, and I expect that to continue in the 228 product line. So I expect the 54% to grow to be bigger of our total recurring revenue, which is the, I don't want to call it the easy revenue, but that's the recurring little effort revenue that we need to just have the data coming off the aircraft, going through the uptime system, and that we charge for. So as the overall revenue increases, that 54% will increase as a percent of the total revenue. A market outlook slide. This is interesting. When you look at the commercial aircraft, you see in 2010 the 19,400 fleet size with a certain number that will be retired, and then 33,500 new aircraft over the next 20 years. That's for the Boeing and the Airbus fleet. That leaves us with just under 40,000 forecast by the large OEM manufacturers. That's a huge market for us. There's big potential there. On the business aircraft side, we see a similar thing with the forecast by 2030 to be 31,000 aircraft. And that is just business aviation and commercial aircraft, the Boeing and the Airbus. Aircraft like the C-130, the turboprop fleets, the Dash 8s and the ATRs, and other non-Tier 1 production aircraft are not included in this. And the AFIRS 228 is completely usable and capable on those smaller aircraft. Some of the key figures from Q1. So you can see that our R&D went up for the first quarter of 2012. That is partly due to the fact that we had brought all of the work in from Sierra Nevada. So we had a team that was larger and taking on more responsibility of the research and development in-house here in Calgary. That is tapering off now. As we release some of the contractors on the program and we bring more of that in-house, that R&D cost is going down. The financial summary. Debt and working capital as of March 31st. So the modified working capital of negative 1.8 million, and then the long-term financial liabilities. This is all explained in much more detail and much better than I can do in the documents that we have. They're all available online. And then the market capitalization, showing the 118 million shares. Financial review. So we have non-refundable customer deposits of 1.34 million and unearned revenue of 1.9. And I'm always glad that Tom is here, so that if there are any questions specifically about those, he can address them. And 370,000 moved from unearned revenue in Q1. We have all the right people in the room if you have questions to ask. So we've got the senior leadership team within the company here and some of the technical people as well. So before we go to do the tour back at the office, if anyone would like to join us, if there are any questions, I'd gladly answer them. And if I can't, there's somebody in the room here that can answer them.